here we go. This is December 10th, 2023. Back testing session. Just starting to record it now here because the chat was about to have me go off, as they call it, and I had to rein myself in so I can keep these videos short. So, let's go Asia. Wow, what a y'all know what this is called? You know what this is called? This is called Whoopee because it takes out both sides of you. This is where people are like, hey, I don't even know if we bullish or bearish right now. What is happening? You know, and they see the equal lows, but they go, all right, now this is not looking fair. But this might have been some earnings or something like that. So the very first thing we do with this, the very first thing we do is we understand that Asia is a range, right? So what do we have here on either side? We know we have 2 points of interest that could possibly facilitate the movement within the range somewhere around Asia. So the very first thing we do is wait for price to get to extreme ends, or if price action is clear, to take to that side, or clear to take to this side, then that's when you get it. And what do I mean by clear? What I mean by clear is that we have this high, right? We have this low that it came from, right? So up here could end up as a double top to short, or down here can end up as a double bottom, to long. So within both of these areas, we know that we'll treat any entries we find within here as ranged entries, and we'll wait for price to give us more within this this dynamic. So we already have our areas. So is anybody, and let me actually just tell you guys how this is done, since it's your first back testing session for the new group that we just onboarded. This is an interactive back testing. So we like the students to let us know if we're short, if we're long, you know, where would our stops be? If we're not long or short, when do we plan on looking for a position, and in what direction? So we talk about those things throughout the chat. And some other people will follow on the charts as well, which is fine. So how many people are around Asia during this time actually taking entries here? And what time do you guys particularly start trading in Asia? That's the first thing we should address, because even if we're back testing, we still want to back test realistically the way that we would actually trade. So I'm not going to back test Asia if I don't trade Asia. I'm not going to back test London if I don't trade London. But if I want to learn how to trade London, I'm going to back test London. If I want to learn how to trade New York, I'm going to backtest New York. If I want to learn how to trade Asia, I want to backtest Asia. So it really just depends on if you guys want to be that trader where you could execute trades around the clock versus if you're just a New York person. If you're the New York person, then you learn about the POIs that we discuss here. And just remember that if New York has this same idea, this same framework, then trade it the same way too. Because what this does is the same thing you can trade on a yearly chart and back. But there are some people who are not executing in Asia. The reason why I like trading CFDs, futures, and all the other stuff that's out there is because certain times there's more liquid moments for me to engage in Asia. To, if I'm coming out of the shower, or if I have some spare time to just, have a quiet house after the kids went down, you better believe I'm executing a trade before I go to sleep. Win, lose, or draw. You better believe I'm doing that. And if I have an instrument that I can do that on, of course, whether I win or lose, it still helps with my development. I want to be a full-time trader, right? Some people are so engrossed in their jobs where they have their identities come from the places they work in. So my identity needs to come from the market. When is the juices flowing for me to begin to engage in clicking the button? And for me, that's 8 o'clock right here, Eastern Standard Time. So this is where I'm usually, looking at trades. Now that could be here or gold, but you could still see trades on UJ, GU, and EU as well. If you're looking for more volatility in Asia, it's gold and UJ, GJ. But I'd say gold or UJ. And if we're leaving Asia and going into London, that's when you start to see, EU, GU start to pick up its momentum. So you have to know when these things begin to become volatile, because that's going to be your bread and butter there. That's going to be where, you're able to take these passive trades without feeling like time is against you. And you can take these little small movements there. So when the volatility actually does pick up, now you have more profit to risk from what you made in the smaller accumulating movements. So we have to make profit and then risk it. We're not trying to risk what we put in. We are not me trying to lose the money I put in. No, I'm not trying to do that. I'm investing whatever it is I'm willing to lose, yes, but the goal is not to lose my money. So what do? I start off careful. I'll take $20 there because, that was, they really paid me much in that first job, I'll give you 60. Okay, yeah, I'll take that 60 there. Mm-hmm. Yeah, I'm okay with that. I never got paid $60, in a couple minutes, so I'll be content. I'll be grateful. Because I know that this is a lifestyle that I want to make it. And that means that with all of this free money being in the market, you have an opportunity just to take a little bit out. It's free. It's in there. It's free. How you get into to be able to get some of it is whatever route you have to choose based on your circumstances. But it's free. You just paid an entrance fee and it's free. But you want to lose your access to the market by just trading all of this craziness, you I'm there, and then 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 I'm... No, that's unsustainable. So you guys see how many entries I take, right? I lit up the Discord with it, the 24 section. So you guys see the amount of entries I can take. The other group, I've done that for them, where it's like, you know, every single possible entry I could. People thought Shaz, Shaz, they didn't know, they weren't there. But I've gotten to a place where I'm helping people now to slow down. That's our biggest issue. We are often in a rush. We need to slow. And I always talk about this. I get the circumstances that are happening around us. Everyone has it. No matter what it is here, everyone has it. But we need to slow down, honor our experience, and only take what we should be content with. Because there's no way that you've seen yourself up $100 and then you were willing to be down $350, but you weren't willing to close at 100. And you know that trade only had you in there for what? 15 seconds? And how many hours would that be for your last? Like, you start to put it into perspective, because your trading actually can grow off of that. You're content with that move. And then when you see that same move on the 15-minute, you're content with the 15-minute, behavior of it. Then you see that next move on the 4-hour. And then now it's like, okay, yeah, the 4-hour, we're going to take that previous candle on the 4-hour. We're going to take that high out. So how do we get there? We know now the 15-minute leads the 4-hour order flow. The 15-minute, it leads what the 4-hour is doing. So, and for me, I used the dynamics of the 1 minute, the 12-minute, and the 144-minute. That's how I see prices. It's sort of like, what do they call it? Like a kaleidoscope or something like that. That's the lens that I can see clearest. If I'm trading on the 5-second, I'm going up by 12. So that gives me 60 seconds, which is now a minute. That gives me 12 minutes. And then that gives me 144 minutes for my higher time frame overhead. And I'll just look at what the daily high and low is, previous day's high low. But how I determine if something is actually shifting to do the thing I back tested over and over again, I look at it through that lens. So it's intervals of 12 that so let's say you might like the 4-hour, or let's say you like the daily. Then you break it down that way. You break down the time within that, the daily candles. You reduce it by 12 till you get to your seconds time frame. So if you got to trade the 25-second if you want to trade the 5-minute, and then you go up the same way, and you guys will get to the number that it might be clearer for you. I'm not saying you have to do that. Some of you guys might just use the 15-minute. Use the 1 hour. You see, I still got the 1 hour and 50-minute on my chart. But I know that when I'm engaging with price, there's a certain way that I want to see it in order to judge whether this is actually a flip or not. And that's just what I've back tested and found success with. Other people might find success with other numbers. Flicker through the time frames and look at all the different ways it looked. I used to look at the 1 minute, the 2 minute, the 3 minute, the 7 minute, the 11 minute, the 17 minute, the 34 minute. All these different time frames, just ruffling through it. The 1 hour, the 8 hour, 11 hours, like all these different time frames. Look, on the 3 day, I don't know what I'm doing on the 3 day, but I know it's about to close on the 3 day time frame, and the 3 month got 19, or maybe, 18, 17 hours left, because I've ruffled through, these time frames and sort of found what I like to see to be able to make decisions on. So it's not just going to come from the high you get from the 1 minute that it tapped into a zone and, yeah, we're gone. Now we're going to take it to the other end. You need to have a higher time frame overhead. When we're entering, that's a little different, because now when we're in a ranged environment and we treat the 5 second like a range, now we're actually able to trade as if we're trending, but in a range environment. So you'd see the top of the range break structure and go back down all the way down to the bottom of the range. And you see the bottom of the range go back and break structure again and go all the way back up to the top of the range. You can see those things when you reduce those time frames to what you know and understand. Some people don't understand the 1 minute yet, but they want to trade the 1 minute. No, I'm sorry, they want to trade the 5 second. Don't understand the 1 minute, but want to be down there on the 5 second. How? If you have not even gotten to the place where you understand what's happening on just one time frame above you. And then you start to hear some of these kids backtest, and they're like, yo, if I just waited for a body closure, the likelihood is a lot better for me to be able to take a trade and profit. And I'm like, welcome to Charters Anonymous, because every single video that we continue to say says the same exact thing. Welcome. You made it. You got did you get your invoice? Because do you know where you are now? You're in school. So you have to treat this like you're here to learn. I'm talking about notes. I'm talking about, even homework. One guy left simply because the homework was too long. Yes, phase that mindset out. Because there's so many things that, oh my goodness, we've been able to put together in just the orientation of candlesticks, the way that we see it, the way we pay attention to it, that a lot of you guys are just simply behind, still not knowing structure, still not knowing body closures, still, wrestling with all these different things and no real understanding of it. So look, let me actually do this before we even mark out these levels. Let me do this. So guys, look at this. This is a down candle, right? This large one right here. This is the 1620 candle. This is a down candle. When this candle opened up, it was here, right? So this counts as a low. And then we went up and put in a high right here, right? And then you saw us go back below it. And now, the end of the candle right here is a wick, not this larger wick, this smaller one in here. So we get here, right? Let me just zoom it in for you guys. So we get here, and we end up trading all the way down like that, right? And then it came back here to close. This is a close, right? So the very next candle opens up here. You guys see where the red body starts? The very next candle opens up there. So what does this next candle do? It opens, and that counts as a low. It goes up above, what? The previous high. And then what do you see the rest of the candle do? Trade down, right? And then go right back up here. And it closes here. So though we have a high up here, there's a flip that happened inside of here that occurred on a lower time frame that allowed us to catch a movement going up or catch price going up. But we flipped up above. You see the open right there? We have the high, we have the lowest point, and then we have the close. Those are all pivots in structure. So there's pivoting within here. I don't think I can go down to the 5 second because of the amount of candles I'm allowed and the date going back. But there's a pivot in here that allows to find a move to trade higher, even though we're in a range. Even though we're in a range. So that's why we take this, because we know this is price retesting the bullish flip that occurred on a lower time frame. Price retesting, I'm giving y'all illegal information. Price retesting the bullish flip on the lower time frame. So when people are so stuck and rigid with this here, oh, this is unmitigated, yeet, drop right through it. And just thinking, oh, because it got there, let me just limit it in there. Why didn't it hold? Because this was unmitigated. Why didn't it hold? Sir, this y'all. Sir, why didn't it? And not understanding that the power isn't in just us getting there and you seeing, price tap there and go. It's literally in the confirmation, but from what time frame? That's in there. So just wanted to I know for some of y'all that's the popcorn moment. Just wanted to add that into context. If you don't understand that yet, keep going through the playlist and these things will click later on. Don't be forced to try and get that and you still don't know, how to read whether we're in a range or whether we're in a trend, But for others that know that there's something deeper here and you understand that's for even if that like blew your mind, that's the beginning, like scratching the surface of what we actually know. Why do you guys think Shaz trades the way he does? This man trades like the world is ending tomorrow, and he has to gather all the supplies for his kids, his grandkids, his great grandkids. Because he sees the light, like actually sees the same stuff that I see on the chart. It's mind blowing. He sees the same stuff that I see, and he had to be molded that way. Like you couldn't just be Bollinger Bands and EMAs and all of this other stuff as a reason to why you think the time element is here. So now this should be the IFVG that opens up at the BISI and provides support with and then Dave teaches swing. Yeah. it will prevent you from learning the deeper things that we understand about price, and why we believe wholeheartedly that every day is a profitable day. Why we believe that. You know, never going back to any that I know people talk about being up and down and all that other stuff. I would never go back to unemployment. Ever. Sorry, employment. I would never go back to employment. Ever. You cannot hire me. I dare you to try. You cannot hire me. Because if I ever lost it all, I would be able to build it right back up again by a skill that is highly coveted in any country you ever go to. Any country. I've heard billionaires like whatever this guy name is from Shark Tank, Kevin something. He said something about it being a very hard question if you lost it all and couldn't use your name to build your success again. How would you get back to this same place? All of the billionaires have no question. No answer, sorry. All of them have absolutely no answer to give. Why? Yes, Mr. Wonderful. No answer to give as to how to do it over again. And we literally got a market that's right here that's saying, any way you want it, you whatever it is you desire, just punch it in. Just put the number there. Yeah, you want this trade to be 400 by the time it go over there? Okay, put the number there. But you got to know what you're doing to feel that confidence to be able to respond as fast as we do. You have to know why we're even doing it. That's why a lot of people have these questions. You don't wait for confirmation. So you just go in on the top. Oh, that seems risky. Yeah, okay, yeah, it seems risky to you because you don't yet see the things we see, but you got to get rid of all of that stuff that's, I'm telling you, the DR range with DTFX might get you a good trade on one of these days where you know both of them just aligning. But if you're actually trying to see how every day is a profitable day, you got to drop some of that stuff. And that's no disrespect to any of those schools of thoughts out there. I'm a big supporter of them just coming out and being able to help people change their lives and walk away from the rat race and all these different... I'm a big supporter of that. But my concepts, I support it even more. Respect that they got what they got going on, but I promise you... nothing else is needed. And the sooner you begin to understand that, the easier it is for you guys to be able to learn. If you try to mesh it all together, you're gonna have struggles. So you literally got to get everything off your chart. Everything off of your chart. And just go with price. No indicators, no nothing. Just price. Just following structure as it's being created, as it's being broken. Yes, sometimes you're going to make a mistake and think structure broke and you forgot to check the higher time frame and what it was doing, and then it ended up trading through your entry. Yes, sometimes you're going to have that issue. That's normal. That's a part of the journey. We've all been there already. We've all been liquidated in environments like that already. That's normal. But the longer you take to be able to put all the knowledge together that's there, and only that, the longer it's going to take you to be able to see exactly what we see and why we see it and why we feel great about it every day and why we use it often and why we reject everything else out there because we know that it's literally the only thing that's needed. So they talk about multiple ways to skin a cat. That's fine. Yeah, there is multiple ways to skin a cat. You're absolutely correct. I wonder how they were skinning cats back in 1919. Did they actually skin the cats? Did they let them grow? Like, were they limited? Or yes, multiple ways. I understand that, but we're talking about efficiency. We're talking about things we can depend on, data we can depend on. We're talking about that beyond a shadow of a doubt. Don't matter what's happening. I don't care what they said. Oh, the U.S. vessel got attacked in the sea, and then that's going to cause the markets to show. And then what do you see? Just up the other way. Yeah. So that we have not seen, but we thought, oh, the markets are going to. And then this here, we see it not even respond to that. Not even respond to NFP's numbers. Not even respond to the things we think, or all these different people out there think that needs to respond this way. Because we're just following the market. So let's get into this. Dang, I'm going to have to cut that 30 minutes out. Y'all let me go on that long for 30 minutes? All right. So here we are. Let's just get a few candles forward. Okay, so we tapped into this imbalance, just a small amount. What is everybody looking for here? Okay, seems to be a lot of weight in. Seems to be some people saying note in the bottom of the range. Yeah. Some people specific. Okay. So, generally, I would at least like it to touch it. I get that this imbalance is here. Yeah. Price can just go mental right off the imbalance and not even come and touch it. But generally, when I'm using areas like this, I would like for that to happen, because I know that my invalidation point is here. And if price chooses to dip into here and trade out of there, oftentimes that's just a small amount of drawdown that I would have found myself into before knowing what price was going to do again. So based on the momentum that came out of there, I'll start looking around here. Not anything within here, waiting for it to go all the way down. Oh no, maybe let me just wait until it go to the low and then it just go that way or something. So for me, it's always where I'm going to begin looking for my short that matters, or my long that matters. And everything else can be worked out on the way based on whatever price action offers me. But it's where. So we're already seeing this movement down, within here. That's about 4 swings in there. It's on the lower time frame. On the lower time frame. So I know on the lower time frame, they're due for a move back up into there. So if that move back up trades into there and goes past it to here, I at least was able to be on the side where that movement on the other end was pushing us back into that previous range. So that's why I'm more or less, a person that would wait for certain things to occur. Now, with these little movements going back up, of course I can trade all of that. But do I care to trade all of that when I'm actually talking about money? When I'm actually talking about losing something? Or should I wait for a measured move? So we'll click forward some. Candles tightening up. Ooh, those are ugly. So what what is anybody doing with this? Is anybody going long from here? Okay, we got a few brave souls that said yes. Just a few. Most people are saying no. Most people are saying no. Now, if I was on the 5 second and I saw some sort of behavior where I could be in this move going up, I would definitely be looking to either bring it here above that. Because remember, usually you need some sort of manipulation both ways in order to get you out of there. So we know that the first one that occurs is that first point in the flip. Then it's that. And then it's that. And into here. So if someone sees a little high inside of here, they're trying to chase that flip to go up, and they were just early. And then we go up to take the validation or the manipulation point that sent people that way. We break above it and tap back in. Now we have our zone. And price and time, where's your invalidation point? I'd be invalidated back here. Yeah, Jody, that's what I want people to remember. That's what I want people to remember. Not wrong, just early. Because that would prevent the spiral from happening. Not wrong, just early. That would help us to be like, okay, wait, we just got clapped. Okay, let's slow down. Let's actually just see what it's... Let 20, 30 candles go by. And then find your opportunity. But somewhere within whatever trade you took, it wasn't in line with what price is doing. So why would you take another one? And then another one after that. And then another one after that. And then another one after that. So we always say wait 31-minute candles. So 31-minute bars. You wait 30 bars to re-engage with price again. Because somewhere something wasn't aligned. And once you get that alignment, now you're on the right side the entire time. You're just going with whatever's happening. So, Yeet. So now we have this, right? And who's anybody going long from here? Now this long. Now this is where that anticipation is looking for in there. And I'm talking about what comes out of this zone. Anybody in? We'll go one candle forward. If we go below 150, I'm in. This person wants me to zoom in. And this is why people are unprofitable. Because we shouldn't be trading so zoomed in to what the actual candles are doing. We should know where we're coming from and where we're going to. But just zoom in a little, maybe that would help. Okay, a couple people saying long, 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 long. So mind you, this is Asia, y'all. That we're saying from down here into looking at price potentially going back here, right? But we just have to be sure that where we are, we're in the right environment to have that expectation to trade higher. Because whatever we're getting into within here and within these smaller areas here need to be treated as smaller moves until we get some, volatility coming in. Let me, sorry. That's crazy. How is this not working? All right. So you see, something like this here in Asia would not have held. But for the people using a high amount of risk, within this because they think it's it's just a point, it's just 2 points, it's just whatever. That type of mindset to hold throughout all of this while you're leveraged, and then watch price margin call you. That's something that you don't want to get involved in. Where are we right here? We have this high and we have this low. So we treat this entire thing here like a range. So here's the pullback. And the issue with having your stuff marked up like this, where you have this low, you have this high, and you have this low, now back into there, when you have this stuff marked up, you don't really know how to make a decision based on what's actually happening, because you're thinking because we're here, we should short, and then we go through it like that. And then you might get the move that goes back down like that. So if we're on one side, we're on one side until that side fails. So you see anybody shorting from here because it's just some up candle and they want it to go down further, yeet right through the top of them. They're out. That's us in New York sometimes too. So if this trades away here, I'd be interested in a short coming back into here. Actually, no. I'd look and see if it makes its way above these highs in here. Remember, when you're shorting something, you want price to take something first, and then you engage. Take something first, and then you engage. So yeah, I guess I'd still be on this side. See, while the short still came out of there, I wouldn't be on that side looking for a short. I would still be anticipating price to go higher while people are looking to take the shorts, like a fractal or something like that, or up candle, whatever it is. Took a little inside low. So what is this telling us right here? This is telling us that it's an idiot box, right? So isn't this us fighting entries for price to go back down? And we're on the wrong side of the market, fighting for price to go back down. And it's not showing any sign of wanting to go down, but they have the change in the state of delivery below the low there. We tapped into the FVG. This is how New York looks sometimes. This is exactly how it moves. We just have those dumps or those pumps followed by now this kind of movement, just larger candles. So you see how, let me just move this forward a little more. You see how the reluctance to be short was there, and I said, I won't take a short coming out of there because it seems like we want to trade up into these highs. And my rule, my specific rule is wait until something is taken to look for shorts. Wait until something is taken. Very important. So now we have this zone here. Price runs out all of this, taps into this up candle right here. Oh wait, let me make sure this is, no, this is that there, and that's where we came from here. Let me just move some of this. Okay, so who's anybody short, anybody long, anybody taking any entries? For me, if we get below this, I'd like to take something back up. Ain't my kick yet. Good. Long on Apex, short on top step. Hey, I see some streamers do that. Okay. Oh, that's nice. No, all you need to do is pop up above. Right there. Now, who would be the person shorting that? Quick scalp. And I'm glad you said quick scalp because this is how some people wrestle in these entries. They see this accumulation, manipulation, the distribution coming, or Judas, above some highs, and this could be on the higher time frame. This could be all these different things, but still, we have no structure broken yet. That's how they mismanage. Wanting to go short while price has not presented an opportunity to go short yet. Once we saw us take this high right above here, putting this low, swung up, putting this high, trade it just below it, and then flip right back up above it. Nobody's flipping short there because this is still bullish, like we said. So we're only on one side of the market, right? And we have 1, 2, 3, 4 swings occurring. So we have 4 swings between this and this. There's a better probability of getting short up there. And sometimes you have to the left just an imbalance here that people are just wanting to take a short because the imbalance is right there on the left. I mean, this is nice how Asia's holding structure like this. Look at that. Look at that. So we're looking to the left at what we're tapping into. And it probably shouldn't even be that. It should be the last upswing, but that's fine. The smaller one is fine to refine it to. So some people are ready to go short because candlestick structure broke here. So that means that we're going to go back up and then tap back in and go for the liquidity that's resting below the trend line. So you got trend line liquidity here. You got trend line liquidity here. Which liquidity is price looking for? That rejection there is not enough to say price is now looking for the ones on the low here. So it should run higher and then potentially reject down like that. So what are your positions? You guys long? You guys short? Oh, out. Okay, some people got out. Okay. Because remember this, guys. As we're trading up, in order to say that we actually can anticipate price moving the other way is to get a run of that low with the body closure. But we have to make sure what? We're counting our swings, right? So we already mentioned we have 1, 2, 3, 4. Fifth one looking to get put in. Watch that. This is just that. We could easily, we do the break and retest, and then you see us go right back to it. So careful of that. Look it up, we still stay in the formation. Break. All right, so in this dynamic, are we still long? Or can we say that we're short now? Okay, quick move down. So as of right now, it's still long. I get what we see happening up here, but the narrative of what's happening up here stops short of here. And depending on what the behavior is down here, if it ends up being a wick down here, then that means nothing and it could send price higher. So now we're determining whether we want to take longs back into that range from here. Well, everybody's looking to take a short because this whole move started to go out. They wanted to take a short back down to there. So let's get some of that off the chart. Nice. So we've traded back to this low. If we take this low, are you guys looking to go short from here? Or are you guys looking to trade back into there? Short, no, okay. You just let it play forward instead of clicking it. So how many people find themselves looking for shorts just like this and are stuck in this environment not knowing whether it's actually short or whether it's actually long? Can't figure it out because it's going up, but then it's going down, but then it's also going up, but then it's also going down. And even though this is the high and the low, it could just be accumulating to go back down because I'm trailing my highs and lows, right? I'm trailing my highs and lows. Because you said, Mr. Teachers, you said to trail your highs and lows, and I'm trailing it. So anybody picking up longs from the bottom found quick success with price just trading below, heading right back into the range. Trading below this low, tapping into this here. What is this? Bottom of the range, top of the range, right? But we're not trying to defend a move like this, or some wick even, or the last up move, or an imbalance that's there, or oh yeah, but it has to have four swings going down then, because we saw that there, but then it has to have that there. We're moving too fast. Price didn't tell us that. After that occurs, then you see price showing you that this was it all along. But this is the whole essence of trailing your highs and lows. So you're never stuck in an environment like this and you don't know where your last high and low is. So is anybody shorting out of this? Or we already see that this is the high that put in this low. When we went back to test it, putting another low ends up being a weak high. That's just a narrative that I would have in terms of not shorting. You see how it took out that high? Now look at this. Remember those same patterns? Maybe let me just use this. That they speak so harshly about, and harmonics. Look, this is it right here. Present right here. But all we see swings. But at times in those swings, depending on where these things align, oftentimes it could give you the better move coming out of that particular area. Just because it prints. We're seeing swings though. But swings will lead you to why everything prints. They will lead you to why everything occurs, why the head and shoulders patterns occur, why, imbalances are not respected. All these different things they'd lead you to. If you just stuck with that, followed them, counted them, you'll see all of these different things occurring around them. But it's literally just following market structure. So let's play it forward. So we take out this low. I would be interested to look for another long. And I know everybody would be asking, why? Because if this is indeed the protected low that put in this high and we traded below it, then whether it's body closure or wick closure or whatever, we'd be looking to trade back into the range of it. So now we have our ranged environment for Asia. Yeah, with the possibility, by the way, of having this. So the two areas I want to look for some movement within prices here and down here, as this is the origin of that move that went up. So now we set up the range to where we see the top of the range and we see the bottom of the range. And we just have to be willing to understand that the top of the range is where shorts are more likely, and the bottom of the range is where longs are more likely. And while we're within the middle of the range, that's not for decision making. Now I know somebody's going to say, but you're making a decision right here to say you're looking to go long back into the top of the range. Well, if we're trading to the bottoms and the tops of the ranges, we have to understand that oftentimes when we're in the middle of the range, we see a price go back up to somewhere and then back down to where we didn't think it was going, or back down to somewhere and then back up to where we think it wasn't going. So when this occurs right here, everybody's ready to sell more. So what does price do on them? Go the other way. So look at how the likelihood, if that sweeps, we'll go back in again. look at how the likelihood of finding longs now becomes easier than calculating what short you should choose. Because you see the little flips there that push price higher right within here. They push price higher to a certain amount, and then they trade back below. We get another sweep here, which it pushes price higher within here, and then we get a sweep back below. So those who are on the short side can follow that. But while we're in the range, we're not using short or long because the range is set. So now we have this next drop here, just like this. Who's selling it versus who's buying it? Are you guys long, or are you guys or looking for longs, or are you guys still short? Because remember, if you know, there's people who have this idea of these London lows or Asian lows being taken out or whatever. So let's say this is Asia's high up here, and we often do see price run a low in Asia or you know, a high in Asia from a different session. If we're looking for the London session to you know, give us some momentum or even take out a particular low and then look to trade to the other side, then that means that this is an area where price would end up stalling, right? This is an area where price would end up stopping. And we know that as we see this drop, we have the ability to take a trade from here, as well as we have the ability to take a trade just below this low back into the top of the range there. So would we be picking up shorts here? Or would we be shorting an imbalance if you know, prior to London left it behind? Would we be shorting an imbalance in there to go back down? It puts it into perspective that when we're responding to the market, we're always responding the opposite way. Responding to something we think it should continue doing after something already occurred. So yeah, I'd be looking for you know, longs down here. 156. I mean, this is the S&D responsible here that we're at, but the sweep of the low of 156 possibly provides an opportunity too. And we now have this. And this is what we'd be looking for price to potentially trade back into. So this is oftentimes how people should plan out their trading sessions too. Because if you're zoomed out like this, if you're zoomed out and you see price like this, you know that there are only one of two things occurring. We have the equal highs here that takes out that inside low. We're back at the origin of the move that sent price up. What what's in here again? Yeah, that's fine. And we know that we're in between a range of that high and that low. So we're still treating this entire thing as the bottom of the range for longs to hold and the top of the range for shorts. Now, I wouldn't have been a part of the short that was in here from this low to this high. I wouldn't have been a part of that because if we took the low and the high, if you look right here, this move up stalled and then went down to take out the low. No, we never tapped into the 50% of the move here. We never traded back up into the previous range that's right here. So me taking this tap and going in, I know this is what we call the toilet paper people. You see a large drop occur, they buy back in, and then we run them out. And the next target ends up being here. So as we see lows being taken out, we know what highs price often looks to come back and get. So when we're on our side of the market looking for a move back in that direction, we know that when we see the accumulating occurring, we know that there's a possibility, even if it strikes below and then quickly shifts back up again, we know now that the possibility is going to get that guy there. So let's play some of it forward. So remember the accumulating we talked about? And how will you ever see this if you're so zoomed into what price is doing with candlesticks and trying to put a dollar amount behind it when you're not even understanding, okay, that's that to the left, that's this occurred up above here. Here's around the session that we have. Okay, yeah, London is supposed to happen. So what you might have is this environment where here, we can get the accumulation before London. And then look. This is creeping into London session. Did London take this yet? Now there goes London grabbing this low. Remember what we said, you accumulate, take that, and then move back to the other side. Where would we go to? What would we be going to look at? But we have this low, we have this high, we put in that low, and then we violate the high. So again, this low, this high, we put in that low, and then we violate the high. So we're aware that our longer moves to go back into the range and have a target of what? Here, didn't we say that? But how are you going to see that all of these different elements are occurring? All of these different things are how are you going to see that if you're in here fighting every single candle? Yeah, we're short, and then yeah, now we're long, and then yeah, now we're short, and then yeah, now we can go long, and then yeah, now we can go short, and then yeah, okay, yeah, we can go long, and yeah, we even got this in here, and we were able to take it long there. And everything else is happening around us, and we don't know how to put those things together. Why am I anticipating price to come to this high? Where am I anticipating it to do it from? But what am I anticipating first? Accumulation. So that's when I know. Stop looking at the left side. Pay attention to what's happening on the right. And then you'll get that moment where it just gives you the clearest direction possible of where we're going. So my only long would have been here and a little sweep within here. And after I watched this occur, I already knew bottom of the range we're looking to go up. So now I would begin trading this in here, knowing that this is a range with what? Previous zone left behind. So I would potentially be looking for a long below that too. But you're on the side of the market where if you're shorting, stops to break even, taken out. Shorting again, stops to break even, take them out. Shorting again, stops to break even, take them out. Shorting again, stops to break even, take them out. And then we begin to go down. Now, long, stops to break even, taken out. Long, stops to break even, taken out. That's the side that we're on. Rather than understanding what the side of the market is getting ready to do. What side are we on in terms of the market? Not in terms of the entry you want to take. So we took something, right? We took that low. And the thing we're looking for is that. And then we know we begin another range. Why? Because you could have that, and then back into that, and then back up to that, and then back into that, and then back up to that, just like that. And I don't know if that's actually going to be the thing. We'll play it forward and see. How many people be shorting this? Short. And they just keep getting taken out of break even. Keep getting taken out of break even. Because it has to go down. me pause it here. So now what are we doing here? Because I know somebody's going to ask this question of, so then how can you get in on this short? Well, at your level of experience, needing confirmation, you couldn't. You had no opportunity to. But does that mean that there's no trade you can take? No. It's just, why look to force something that did not give you the opportunity to get involved? And now you're forcing price higher. And what does it do? We drop back into the previous range. And then where do you end up finding your opportunities? Better opportunities to take part in. And that's in terms of longs. Now this is literally how NASDAQ trades in terms of shorts. They don't really get a lot of opportunities to short. NASDAQ does not really give a lot of opportunities to where you can get involved in the short. So when people see this whole extension, they want to be a part of either this continuing higher, or they want to find a move to short it back down. So they end up doing immature things like this. Short, 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 short. Okay, so what about this? Short. Okay, stops to break even because now it has to go, and it's still going that way. Run out those highs. And then we drop there and give them no opportunity to get in. And guess what? Here's where they flip bullish to start going long. Because we took out the high. And they go, okay, here's the 30%. Okay, I'm going to take a long at the 30% because the 30% always gives a large move. And then what? They hold it to their death. That's how some people are trading with these concepts. Rather than sitting back and saying, what's more, what has less risk for me? And of course, somebody might say this is the OT yeet, whatever it is. But either way, we already understood that we put in this low, we put in this high, we put in another low, and then we swept that high. So even if price is trading away from here and going to look to take out a high or something like that, what did I say in video? I think it was 7 or 8. I said a lot of the times if you just take a double top or you take a double bottom and you put a square around it, a lot of the times you'll see price trade right into that and react. Because oftentimes within the double top or the double bottom, you might have a flip within there fractally, or the flip is actually on that time frame, but it traded to both extremes before leaving. You can still find price taps into the 50% of it. That's just training your eyes for something. Or training your eyes to wait for certain areas. And then finding a way to get involved in it. But some people just have no structure at all. And that's the thing that's preventing progress. That you're trying to take every single thing you can find and you end up needing to zoom into the chart. Zoom me in. I need to see it. I need to see what's going on. No, you don't need to see what's going on. You need to know what's happening based on backtesting. Our entries have nothing, there's no weight in our entries if they don't have a target, if they don't have an invalidation point. Why are we on this side of the market if there's no target up here? Why are we on that side of the market if there's no target down here? And targets are based on what? We talk about the highs and the lows that do not make it as a part of structure. We know that that's just price coming right back to it to sweep it out. So there's even a 1-to-1 from a now, whoever's shorting here to want a low down here taken out, and they shift their stops to break even, and they go, oh yeah, we got to take out the data lows, or we got to take out, we got to go into 50% of the wick, or the equal low liquidity. Y'all love saying this. The equal lows is there. So the equal lows, price is going to target the equal lows. It's coded in the algorithm. And you watch it just trade right away from it and go the other way. Oh, but wait, there had to be some silver bouillet imbalance in there too. London silver bouillet, it had to be up in there. I don't know. But narrative means more to us than anything else. We can't find entries long or entries short without a narrative as to why we're taking entries long or taking entries short. What occurred in structure? I get that we find little opportunities within these, small areas here. I completely understand that we could find stuff like that even in New York. We'll go forward to New York and start to see the larger movements that are showing itself in New York. But when we're trading in ranged environments, we have to understand that our entries are just that of a range. This is just a large idiot box. That's what this whole thing is. A large idiot box that came out of New York and is still here in London. And what? Extremes. Top of the range, bottom of the range. 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 Top of the. So now you're not stuck in these little tiny areas right here in the middle and saying, yeah, but this was the last unmitigated candle at the 0:33 candle just after midnight. That one there, it was the one that was unmitigated that left price behind. And after taking out this trend line liquidity in here, then you could see price dig its way up into the imbalance and the 50% of that candle. But I wanted to know, why didn't it hold? No narrative. So zoomed in, no narrative. And the support and resistance guys, forget about it. They just be over here like this. Okay, clean candle to the left. If we break up above that and test it, we'll go that way. Okay, yeah, this major support. It could end up turning resistance. Okay, yeah, clean candle, clean. We see price go down into this here. And they're looking at ranges, while us in the algorithmic community is trying to look at the smallest risk possible. Let me take this little tiny up candle in here. Let me just put that there with 4 contracts. Yeet. So our narrative is important. So anybody still long up here? I think we can trade away here and then look for a short back into here. Back into the zone here. At the top of the range, time to look for shorts after something is taken. Huge pump, toilet paper people. They get in, we go take them out. Yay! Gone. That's how we base our ideas. We base our ideas in what's happening within here and not narrative. Take something, right? Was there not highs here to the left? We saw this high taken, and remember this drawing here? To take that and then drop back in? So we can't, find ourselves longing just because we think it's a long opportunity, or shorting just because we think it's a short opportunity, but placed in narrative. Did it take this yet? So what are we looking for here? A range, right? We just took the high that put in this low, the highest point that put in this low right here. We traded up, came down to take the other low, and then we're just taking that high. So what happens when a higher time frame, higher low is taken? Expect retracement? Nope. Video 9. Steam engine down. No. Video 9. You see what's happening here? So though this is trading away from it, the short that comes in from the accumulation looks for this here with a move back into the range. But this seems to moved up a little more than I expected. So here's where a lot of the times we're still looking for these small risk buys, and we find, you know, lows being leaned into, and not holding. You say, oh, here's a swing here. It traded up above. Why didn't it hold? We're back in here again. And these are, let me just stop right here because I know a lot of you guys ask questions about this. These are where you guys or some people here are getting liquidated. We see a close up above this high. And we immediately think, okay, now it's time to go long. And then we see us put in another low. And we get taken out. Or we take this little candle, this little down move before price shifted up. And we see us split right through the low of it. And then it actually trades up. Or we're here trying to take out a short within here. And it trades through. And now we think, okay, the candle here is proof that price wants to go short to take out what? Liquidity. And we watch it trade higher while it's all accumulating. I thought it would have happened down here, but it looks like it's up here that it's doing it. I'm dying. They can just keep sending price higher. Oh, I remember this session actually. Yeah, we came back. We kept going and we came back here to that. So in this type of price action, this I'm glad this is happening. In this type of price action, when you see something inching higher like this, and you see this move away like that, these little tiny highs and lows being created, just keep this as the base. We trade away from it, and then we come back to test it. And if we are to reverse, it would reverse out of here or go to take the lows and then begin to move down that way. Just speed this up a bit. You see, I told you just it kept going higher that day. I remember it. And this is news that occurred. So I forgot what this. It was 8:30. There was some news. It was streamer premium. Yeah. So this here. This here took out this high and had this strong drop back down below, right? And remember, this was our last down move here that sent price up. So what we generally look for, especially in a move like this, that gives us that drop, everybody's looking to short the imbalance back down. But what we generally look for is for price to put in a high, drop back below, could have a little accumulating happening here, and then trade back up. Just like that. And that's because we have this huge pump followed by this huge dump, right? And these people, I told you, NASDAQ does not allow, and I don't know why it occurs, but it's always going to take out shorts that were left behind. So that's one reason why I choose not to even engage on that side. Because it's always going back for them. If you want to set and forget entry, more than likely it's when price is dropping, taps into something, and then moves back to go and take a high. Just like we saw occur here in Asia. So here's what you guys should backtest. Because these are the moves that you guys often want to engage with, or you want price to, you want price to give you some sort of move that's going to give you a huge amount trading out of it during, these kill zones and stuff like that. What you guys should backtest is this pump or this drop, whichever one, into what occurs after. Your focus should be every pump or every drop that we have during market open. Look at what occurs after. And then you can know when you should go in versus when you shouldn't engage. If nobody found an opportunity to get in the market when this high was put in, which there was some students who did ride that short down, but if nobody found an opportunity, why would I think that the opportunity is going to be present for me here to take me further down? But I know that there's an opportunity to buy this back up. And if this continues to go and trade that way, now I'm not the one holding this entire imbalance here with all of this risk behind here, knowing that these people still haven't gotten taken out yet. And it's the same reason for why we expect these people here to get taken out at this low. And I'm more than sure the sentiment is probably, NVDA profit taking or something. But let's run it forward. So they put in a high. Accumulating down here. So what side of the market do we look for? And though the precious imbalance is to the left and can yield us a move down below, look at what was easier to find your entries versus now what has you fighting in this. And we're following the lows too. So shorting the left just because there's an imbalance present is not, this New York session was yuck. I mean, nice because it was a range, but I'm surprised we didn't go anywhere. So how many people here coming from the other disciplines used to short imbalances like this? And wanting to see liquidity taken out and having all of this, your whole entry just in like that. Because, it displaced the lows, so it's displacement now, and it just... Wondering whether it's going to go down and go back down below to take those lows down there, or if your stop loss is going to be hit. That's why I said don't trade imbalances, because oftentimes the imbalance just shows that you missed the move. Oftentimes that's what the imbalance is. That's what an imbalance is to me. Did I miss that whole move down? Because I've taken entries before, and I was that guy sitting around like this from the higher time frame, wondering if it was gonna actually go down there or if it was gonna swing that way to go there. So yeah, they'll tell you, we don't trade those baby time frames. The 15-minute is better. The 15-minute is better. We live on the 5-minute imbalance rate. We live on the 5-minute. I don't know what price does if it runs back up there, but my idea. Oh, look at that! They got a little bit of money. And look at this. Look at this. Lows are here. Yes, imbalance provides a short there, and then it stays like this. Just stays in a range the whole day after a huge dump like that. And all we're doing is what? Bottom of the range. And unfortunately, this would be the top of the range. We trade down, huge dump, right? What do we anticipate? Price to buy it back up. And then we get stuck in these moves again. Oh, here's another imbalance that formed. And then here's us sitting in the imbalance, hoping that it propels us forward the way it's supposed to. And the detail that we have is trail your highs and lows. And just follow that alone. Nothing else. Doesn't matter what time it is. Just follow that alone. So, yeah, this is holiday price action. Somebody said it's the day before Thanksgiving. Yeah. So even within that, you could still make sense of what's going on, what's happening, without having to hope that your FVG holds, your imbalance holds. Oh, this is an imbalance, as well as there's a swing, but it's at the bottom of the range. If we know that price drops, puts in this high, right? And then we trade lower and we go back to take out that high, then wouldn't we want to wait for that to occur? So we talk about it a lot, and people ask these questions. We talk about the toilet paper people. That huge drop, they often buy it up, drop, take them out, accumulate below here, and then go back to run them there. Then if momentum is strong enough, of course, you'd have some higher time frame area. You closed up above there. You go back into the zone below here, and then you see price trade out to whatever's up here. So if you weren't in that large move heading down like that, that's great. Because that's your indicator that we're getting ready to get a move that you can play both times. The one there, down into the one there, accumulating through here to head back up and take that one out there, with the possibility of trading back into that range after that flip occurs and then go that way. And that's, what a flip ends up looking like. And the same thing goes for if there was a pump that way. Same thing goes for that. You'd have the same move going up like that. You have those people trying to get in. You see us go up above that. You see us accumulate. And then what? You see us go back and take them out there. After taking them out there, there's our flip to now trade back into the lower portion here. And on every time frame this occurs. On every time frame. Whether it's the 1 minute, whether it's 15, 4 hour, daily, whatever it is, this occurs. And if we weren't moving so fast to try to trade every single thing we see, we'll miss the detail of how that flow actually plays out. That's what you guys should be back testing. You guys know how to take your entries already. You guys know the flip that you need to occur. You guys are aware of that. But you guys got to understand that you need to stop fighting these little things here. Wait until you have that dump. Usually by 10:30, we already have it. Where's 10:30 at? 10:30 is right here. And we would have already had a flip that price was trading right back into at 10:30. 50% of the flip, and now we trade out to take the high that put in that flip. Why do you think 10:30 is a rule, a reason for you to wait. Because oftentimes you're not in that large flash, but the best time is when it already happened. And now you could actually take money out of the market and feed yourself, and you do not need 100 million points. You do not need a bunch of points. So that's why 1030 is a thing. Not because you actually need 1030 to trade with. But you actually already have some clarity that's occurred. Most people are getting chopped up in this. Oh yeah, there's this swing below here. Yeah, this imbalance, this imbalance, this imbalance. There's an imbalance there. And then we stretch back the other way. And then they're trying to take a confirmation within here because we closed up above the previous candle, and it smokes them out too. And then we trade up again, and then smokes them out again. And now they want to take a short out of this. Stops to break even, goes that way. Long out of this. Okay, this is the S&D responsible. Yeet, drops right below to there. Bottom of the range. So these things, this is more of like a narrative back testing than an entry back testing, because it seems to be that people are just trying to long and short areas because zones are present, and not understanding that zones are everywhere. But to be on the side where you want to look for a greater return, you want to hold those moves, to be on that side, it needs to be within a particular narrative. Not your 1 minute entry in the 5 second going to take buy side on the 15 minute. Very, very important. So let me turn this recording off here.